At a time when major sectors like construction are only just beginning to see some respite from the economic crisis, some have managed to surprise investors and analysts alike. Property is one of them. With home prices at some of their most affordable over the last year, analysts reckon the time is now right for attention to turn to higher-end properties in Q3. With this being the case, we're happy to welcome to our studio tonight Datuk Azman Mahmood, Chairman of upscale property developer Crystalview Sendirian Berhad. Welcome, Datuk.
Thank you
for joining us on a Sunday night. Okay, let's get started. Datuk Azman, you're mainly involved in the upscale property market, particularly what we call boutique properties. Can you share with us what conditions have been like in this very niche sector over the last year?
Well, I think generally there is still good demand for the upscale properties and perhaps the boutique so-called products. Now, but I must say that one has got to look two different categories. One of which is the landed upscale sort of properties like bungalows and probably semi-Ds, and the other one is the condominiums. Now, demand have been affected since 2007, and I think it's continued by the so-called subprime crisis in the later part of those few years. Now, buying for investment, especially in KLCC, has been slightly affected. But I must say that what they call for bungalows in Bangsa, Damansara Heights, and perhaps a bit in Monkiara, and what they call Hatamas, and perhaps Bukit Tunku, I think they're still selling, albeit slow. Prices have been maintained. I've not seen, through my experience, reduction in prices for these upscale properties, especially in the landed sort of categories. KLCC, perhaps there has been slight reduction. At the peak, I think they were asking about 2,000 ringgits per square foot. But now I think we could see advertisements for about perhaps 1,006 per square foot. So this is the position of the upscale sort of properties now.
Okay, what specific issues actually affect your particular sector?
Now, I think generally, you know, the upscale properties, the interest rates, even though it's low, now the buyers are quite indifferent because these guys are loaded. And the people buying upscale properties are probably in the late 40s or 50s. And I think they have probably got cash equity in the existing homes. So I mean, they could easily sell off their homes and get some cash balance there and put it in the new sort of homes that they buy. But generally, they are quite wealthy, and I think they rely a bit less on the bank borrowings. So in my project, I think what is important is now is location and possible security. For those guys going into high-end properties, I think nowadays the top, I suppose, concern is security. Developers have gone into 24 hours guarded facilities. Some have gone into gated sort of, I suppose, development. So this all to ensure that those buyers have a really good sense of security when they live in their homes.
Okay, and what measures did you take to retain interest in your properties during the last 1 year?
Well, I think we are dealing in both types of properties. One is residential, the other one is commercial. Now, as far as commercial is concerned, I think what our boys went out to, I suppose, inform their clients is that this is a good time to invest. Those people, those businesses that have made profits and got cash. Now, the low interest rates is a double-edged sword. On the one hand, it's cheaper for buyers to borrow money and pay for the houses or for the shops. But at the same time, for companies and for individuals who got cash, if they put idle cash in the bank, they're going to earn about 3.5% a year. Now, inflation, you know, is much higher than that. So putting in the bank, you're going to have what they call a reduction in real income of every year. But if they were to put into a commercial property, now I think they could easily get enough yield on their investments to cover the inflation. Now, that's not to mention the possible capital gains that they will get from the properties if they hold it, quite for a fair bit of time. Now, for I suppose residential, the story is slightly different, because for residentials, people buy homes normally for owner occupying. So I think here the yield may not be, I suppose, a significant point for them to consider before they make a purchase. I think it's more of making sure that they move houses, I suppose, to change the quality of life for the better. For instance, in our company, we're targeting for what we call the migratory market. Guys, when they were young, they can only afford perhaps then a link house, costing perhaps about 300,000. Right. Now they have a bigger family, the kids want their own room, so they need to have a bigger space. So they move either to a semi-D and perhaps later to bungalow. By selling the existing house, now I suppose they probably make a slight profit. With that, they add a few more 100,000, they're into a better quality of life for them and for the kids. So this is where I think the growth for residential houses are generated from.
Okay, we'll just have to hold that thought, Datuk Azman. We'll just run for a quick commercial break and we'll be back after this. Please do send any questions you might have to stockwatch@tv3.com.my. We'll be back right after this.